In today's video, I'll show you one way you can use the morning opening range to identify trend days like the one today before they actually take place. Now, the whole idea of this stems from a very simple three-step process that you can follow on your end as well. The first step of this three-step process is understanding what today's opening range is in the context of what our average opening range has been. For all Volatility Box members, I use the opening range backtester, which you can download for free on our website as part of your membership. That's tosindicators.com/backtesters. And there, download the opening range breakout, which will give you this very simple label which plots what the average range is over whichever time period you're looking at. For everyone else, in case you're not a Volatility Box member, but you're still looking for similar information, you can download our opening range breakout indicator for free on our website, and I'll leave a link to the indicator in the description box below. It doesn't have the average range labels, but it will still allow you to see things like the clouds and the levels to follow along. Now, coming back to our three-step process, the first step is understanding what the opening range is in relation to the average range. Today, the S&P's opening range was 5.5 points, and our average range is 10.47 points going back 15 days. If I expand this from 15 days to 30 days, you'll see the range expands even more. This tells us that the S&P's range tends to be between, let's call it 10 to 15 points on average. Today, 5.5 points well below this range right here. So that's our first clue. We have a smaller opening range. That takes us to the second step of our process, and that's using the smaller range to then see, hey, do we have an opening range breakout in one direction or the other? And if we do, are we able to hit that second target, which is the full range target, fairly quickly here? In layman's terms, what we're looking for is, let's say in this case, we had a bullish opening range breakout. We want to see the bulls show us strength and take us all the way to the other side's opening range. And you might even add in some strict criteria there where you say, hey, we need to see this happen before the sellers are able to take us to even say the half range mark right here. So that would be a way to show very aggressive bullish strength. It's the bulls are able to take us not only from the opening range breakout to the half range level, but the full range level all before the sellers are able to take us even halfway down. So that's the second clue of the puzzle that we have here. We have a short or a small opening range breakout, and we're able to hit the full range target of that fairly quickly. If that happens, then that really leads us to step number 3, which is the step we can use to take advantage of any potential setups. And that's where we look for any kind of pause here. If we're going to get a little bit of a pullback, this is where it typically happens. And we can use something as simple as our momentum cross as our way of understanding when we'd like to enter in, say, the continuation of the trend. The momentum cross are these little dots that you see on our chart right here. It's a free indicator. It's very simple. All it looks at is the 3 exponential moving average and the 8 exponential moving average. And you'll see a dot plot whenever one crosses above the other. So the blue dot here tells us that momentum now is finally crossing to the bullish side after this little bit of pause. Then we had momentum try to reverse, failed almost right away. Momentum switching back up to the bullish side. And this right here is the entry to participate in the continuation of the trend from the smaller opening range. Now, of course, if you wanted the early entry, the opening range breakout in itself is what that early entry would be. But this is a way to use clues post the opening range, post hitting targets to still try and get into trend days before they've taken off. Now that you've understood this 3-step process, let me show you a few different examples. Today, or this was today's example, which is April 19th, 2023. Another example was April 13th, 2023, which is very similar to today's example. One more time, if we go through the 3-step process, step 1, our opening range, 8.5 points, well below that 10 to 15 point range we were used to seeing. Then we see price action here, breaks above with an opening range breakout to the bullish side. Bulls very much in control, take us to our full range target. We then see a little bit of a pause here. We then see that pause reverse with that 3 EMA crossing above the 8. And very similar today, that happened right after the bullish or bearish attempt, You can see how that trend then continues going up some more even after hitting that opening range target. So this was April 13th. Now let me show you one more example. April 10th next. April 10th, that's this one right here. One more time, opening range that's less than that 10 to 15 point range. We have a bullish breakout. Here, the bulls are unable to hold the sellers from taking price action back down to the half range mark. So you may consider this weaker compared to the other two examples we've seen so far. We still see price action go all the way up to the full range target. And after the full range target, we still see price continue to trend without giving any kind of pause here. So this setup to me didn't look as picture perfect as the other two, but is one that still hits that full range target and does still continue trending even after hitting that mark, after having the slight little pullback, which then got confirmed with the bullish momentum cross. So this was April 10th. I have 3 more examples for you. The next one is April 5th. So let me come back some more. April 5th, was this example right here. April 5th and April 4th are very similar. We have a breakout to the upside early in the morning, which reverses. That one does not hit the full range target. Instead, we get the bearish breakout. This one does hit the full range target. We then get a little bit of pause, which then the momentum cross reverses, and we get one leg down lower here. This is bearish example number 1, and then the day prior to it is another example, a little bit cleaner here, same idea, bullish breakout, we don't hit the target there, instead reverse, we hit the bearish target here, we don't see really the momentum cross take place in this entire pause, but instead price just makes the next leg down lower. And finally, the last example I have for you, which I thought was a tricky one, but one worthy of calling and ending on, was March 30th. The reason I thought this example was a little interesting, our opening range, 6.5 points, well below the average of 10 to 15 points. We see price break to the bearish side. We see the full range target get hit. We then see price reverse. We see the momentum cross confirm this when we continue back in the bearish side, but not before price goes all the way back up to the other side's opening range. And really, this feels more like algo activity than anything else, taking out all of the stops on the other side of the opening range here. So I thought that was a very interesting example of how the momentum cross allows you to wait for confirmation before any of this sort of chop takes place, but why that is a very powerful yet simple way of using the 3 and the 8 EMA to keep you on the right side of trades. I hope you found today's video useful. One more time to summarize the 3 different pieces we talked about. 1, you have an opening range that's less than the average for whichever market you're looking at. 2, in that opening range, we have a breakout in one direction and we hit the full range target in that direction, ideally before letting sellers or buyers take us back to the half range mark. And once that happens, we're looking for some sort of a pause here, some sort of a potential pullback. The momentum cross is your guide here, letting it tell you when it's safe to enter to participate in the trend continuation move. Hope this video helped. Take care, everyone. Good luck trading, and I'll see you in the next update.